From boner to stoner, Tesla is down. Somebody forgot to take their blue pill. And you can see the gap has finally been filled. It actually did go a little bit lower. It went down to about 905 this morning. Let's zoom in. Zooming in on the 6-month chart, you can see here that it is holding that red line or the bottom of the gap as a level of support. But we still have to see what happens at the market open. We do have this red line, which would be for the top of the gap from the original starting point, just above the 940 level. We also do have the 20 below the 50, below the 200, which does mean that there is going to be room for a lot more upside. On the 20-day 1-hour chart, you can see here that there is a new red line that I drew down here at $900.40. You can also see the 20 below the 50 below the 200, but let's zoom out and see why I put that in there. Zooming way out to the 3-year 1-week chart, you can see here that red line extends all the way back here. Okay, now this level was $900.40, which was never retested or reconfirmed as a level of support. Also, you can see here on this side that we have the 20-day moving average on the 3-year chart just below that mark. So it is possible that it does pull back to retest that, as it hasn't been retested in quite some time. So I wouldn't be surprised, and I would be happy to see that retest and then push back up from there. And of course, as mentioned in my last video, the Nasdaq, we wanted to see if it was going to break above and hold that 16,400 level. And look at this, got rejected and pulled back down hard. All right, so now why did that happen? Because of the VIX. Now remember, in yesterday's video, I told you about this little gap right here getting filled. You wanted to see if it does hold that bottom red line as support, and it did. It filled that gap. It has the 20 below the 50 below the 200. Now what I want to see today is if it's going to break above that red line, hold above the 200-day moving average as support, and then push back up, as we do still have this gap up here to fill. And when that happens, the rest of the market pulls back, because it's a volatility index. It tells you about the volatility in the market. When there's a lot of fear or FUD in the market, everything else pulls back and this pushes up. So it's pretty common for that to happen, and one of course affects the other. AMC, as I mentioned before, I wanted to see if it was going to break above this red line and hold it for support. It clearly did not, and it did pull back. So now it is below the $24 level. So that is a very hard level that we need to watch, see if it is going to break and hold above that. If it does, we can obviously see some more upside. Want to see if it does break above the 50 and the 200 right here and then push back up. If not, it can get rejected by that level and then push back down. Lucid, along with everything else in the EV market, is probably going to be pulling back because Big Daddy Tesla is pulling back. So if Tesla does that, all the other ones will do that. Not only that, but you can see here on this chart, the pattern shows a very bearish play. Okay, this is a very common bearish pattern. Whenever it pulls back like this, comes back up here, it's usually going to pull right back down. Not only that, it did get rejected at the 200-day moving average. Plus you got this green line here, which is the money line. If it does not break above and hold that, it is not going to push back up. So of course we do have to see today if it's going to come back and retest this line down here. If it does, we want it to hold for support and then make a nice W reversal. Otherwise, more downside ahead. And this is why it is so important to learn levels before you trade, or if you already trading. Please make sure that you learn how to read previous levels of support and resistance and moving averages. You can't just have one without the other. You need all to make a very clear picture. Okay, so trade safe, don't ruin your week. It's Friday. Hope you guys have a great weekend, and I'll see you in the next one.